Hey everyone, this is Dr. Duru from Ahan Analytics with the market breadth. All right, this is a big day. Stock market is overbought again. It took the jobs report and ran with it. All right, let's do a timestamp. It is June 6th, and it's well after the market close. And here are some of the big headlines. And one thing I noticed in reviewing the headlines, gosh, Trump's name is just all over the place. And I'm realizing that there's just this sort of news overload. And it's notable that some of these things are, a lot of them could be market moving, some not. That the market is really just taking this stuff in stride now, which is what I expected to happen at some point. Even this big rift between Musk and Tesla here that also filled up the financial headlines really only impacted Tesla stock. It didn't really seem to be a damper on the market's mood too much. A little bit on Thursday, yesterday, but not too much. But anyway, these are the big headlines. You'll notice that the jobs report has already fallen off because it's so full of all this political slash economic news. But the one thing you can see about the jobs report, this headline suggests that it was pretty strong. As always, economists and pundits will debate about it. Some people permanently seem to think that the jobs reports are fine, and some permanently seem to think they're always bad. So anyway, here I believe this that there is nothing in the jobs report that says the Fed needs to cut rates in its next meeting. But anyway, like I said, the most important thing is, despite all of this news, the stock market broke out to overbought levels. So let's jump into the technicals. Okay, here is my favorite technical indicator, what I like to call AT50 for above the 50. And it is above 70%, which is the overbought threshold right here. And the importance of this is there's multiple reasons why this is important is because it gapped higher. It didn't just pierce higher like it did the last time. This was in middle of May and it didn't hold last time. This time with the gap higher, I suspect we're going to have a much longer, I shouldn't say much, but we should have a longer overbought period. Now, typically when you hear the word overbought, it suggests that the market is topping out, it's bearish. But anyone who's followed this, my analysis of the percentage of stocks trading above their 50-day moving averages knows that actually getting to overbought is a sign of strength in the stock market. So things are not topping out or bearish until AT50 drops back below the overbought level because it means then that the buyers have are getting exhausted or are exhausted. Note that if you recall, I did not signal bearish. I did not flip bearish when AT50 dropped below the overbought threshold last month. And the reason for that is because, as I keep saying, the market is well supported. The technicals are winning out time and time again. So let's see again what I mean by well supported. Let's take a look at the S&P 500. You see this magic here. The Let me see. Let me just change the scaling here. Give me a second. Sorry about that. Auto fit. Okay. And one more click. Okay, there we go. Sorry about that. Okay, so the magic of the technicals, these purple lines, once again, this is the pre and post election prices. You see how on Thursday when the market fell back about 0.5%, that was a mild response, I think, to the rift between Musk and Trump. I know I said there wasn't much of a reaction. Well, it's because that pullback stopped right here, right at support, presumed support, which is the first post-election close. And look how magical that worked out. Jobs report and the market gaps higher, and the S&P 500 gains 1% and closes right at 6,000. Look at all this magic that just happens with round numbers and technicals. I love it. And note that this close is also important because it has confirmed the breakout above the post-election close. All right, so now the S&P 500 is all clear to test the all-time high. This is the last all-time high right here, just 4 months ago. And, it's been an impressive run. I mean, look where we were just 2 months ago. Just an incredible change in market sentiment. I think that if the market breaks out above this all-time high, the S&P 500 could be on a massive run because I have to believe that so much negative sentiment and selling, motivated selling was washed out in this big V area. So we'll see. We'll take it one day at a time as usual. So that's again well supported. Also means that look, the blue line 200-day moving average is down here, ready to catch any pullbacks. The 20-day moving average is going up steeply. It's ready to catch any pullbacks. You see all of that worked like magic back here on May 23rd. And we even have the 50-day moving average, which is trending upwards, is also ready to catch the next deeper pullback. So well supported index. NASDAQ is the same. I'm surprised that it did not clear yesterday's candle too much, but just like the S&P 500, it looks like it's on track to try to test out that all-time high. I forgot to mention that for the S&P 500, it means that I will be trying to do as many trades on SPY call options as I can on little dips to any kind of support or even playing a momentum run. And we have IWM, the ETF of small caps, and it had a nice breakout to off of the 20-day moving average, the dotted line. I did buy earlier in the week on this test of the 20-day moving average support, and then I sold it right away the next day. I mean, I did have a 2-week expiration, but I thought that this big surge right after buying the put option, call option was just too good to pass up. And I did not buy back in when IWM retested the 20-day moving average yesterday. So that was my bad. I missed out on a nice gain here. And looks like IWM is back on track to test the 200-day moving average resistance. But, I never regret missing any kind of moves in IWM because I have a very large position in shares. So I'm just using call options to trade around the core position. Let's take a look at the VIX. The VIX finally cracked the support level that had been holding. It even held yesterday's small pullback. So I just drew the line there. You can see it just pierced that support. The support is from the low point right before the big tariff trauma, and noise sent the VIX soaring. So now we are entering officially an area of complacency and increasing bullishness, believe it or not. So, I expect the VIX to continue lower as the S&P 500 rallies higher, and my favorite technical indicator, AT50, continues to get more overbought. All right, let's take a look at some individual. I'm just going to fly real quick because there's some very interesting things that happen here. Much to my surprise, Best Buy flipped around from its 50-day moving average breakdown post earnings. It lost 7.3%, and buyers just stepped right into it 2 days later, and they've been riding it higher. So something is up. I did play the put options. I thought this was confirmed. The breakdown was confirmed, and I was very wrong. So now I've got to get back on the horse and get bullish again on Best Buy. I was hesitant for a reason. And of course, if Best Buy is flipping around, XRT is back in bullish territory. I really thought that this breakdown area here was going to spell trouble. It did not. XRT is now on the move. So again, these kinds of things you should expect to happen because the market indices are well supported. We're in overbought territory, which means it's a confirmation of buying strength. So the bias is going to definitely be bullish for me. Micron. I really thought that Micron would stay under this 200-day moving average umbrella. You see how this rounded curve pretty much put a ceiling on top of Micron. Well, Micron, it broke out, and what is this? In fact, all week, every day this week, it popped up higher, kept gapping up higher. I never really saw any news to really explain this, so it's really amazing. I have a hedge position here, and I keep rotating through call options, and I keep expecting at one point for Micron to disappoint, like it did way back here, and start up its next downtrend or pullback, but it hasn't. So I may just drop the hedge and just start going full bullish on Micron, but we will see. It's a little stretch now above the upper Bollinger Band for 2 days straight. So it just stands to reason that buying will cool off and the stock will pull back to some extent, maybe fill this gap higher from Thursday. Okay, the discount store saga continues. Looks like something was up on Dollar General. This is just one of these stocks that I've been looking at and barely traded, much to my chagrin. I mean, the technicals were screaming by, and I just did not get on this one. And I've been even talking about it. So it's kind of embarrassing to see that it went up a massive 16% post earnings and I didn't have a position. Look at how well the technicals held. The 20-day moving average held a support before earnings. Look at how well the 50-day moving average held here before it zipped up higher for 4 straight days, and so on and so on. This stock is very well supported. Now, on the other hand, Dollar Tree reported earnings and it fell 8.4% post earnings. I didn't know what to think, but look at this. Once again, the technicals came to save the day. The 20-day moving average held a support, and the buyers just jumped right into Dollar Tree for a 9.1% gain, erased all of the post earnings losses, and is right back into bullish positioning and trending. That was quite a surprise for me. I didn't know what to think about Dollar General soaring on after earnings and Dollar General pulling back. But now both of them are in bullish positions. So the repair and the bearish to bullish reversal continues. Okay, let's take a look at, I think this is, yes, Constellation Energies in the news. I put this up here because it did a Meta power deal, and look at this. This is the classic gap and crap. This is a topping pattern. I'm not going to short the stock because nuclear power is all the rage right now, but I'm going to keep an eye on this because this does signal some sort of blowout top. Look at the big volume down here. This Meta Power deal sounded like a pretty bullish thing. And when bullish price action doesn't follow bullish news, something is wrong. And you can see here also that CEG topped out right here at this previous high, at a previous year's high. And in fact, that looks like, yeah, the all-time high. So that's a double warning for anyone who's in there. I'm not selling, sell it. Not saying I'm going to short it. No way. But it's just something, it's like a yellow flag warning. CoreWeave. This is this is a classic case of when listening to people with all the bad fundamental stories just doesn't work. When it came out in IPO, I was interested in buying it because it's an AI play and it sounded like a strong one. I'm big on the AI plays, but I listened to the naysayers who said that the stock is expensive, very high debt levels, on and on and on and went. And the stock pulled back and look where it stopped. It stopped right around where it opened for its IPO, and it's been a rocket ever since, just straight up. Now, I heard that maybe there's a short squeeze going on, so presumably there are a lot of people who acted on the bad fundamental reads. I'm glad I did not, but I'm also pretty sad that I did not just jump in anyway, particularly here, this breakout here. I've noticed these V patterns in a lot of these IPOs. There's initial excitement, then there's the complete reversal or near complete reversal that washes out all the sellers, and then bam, rocket ship higher. And that's what happened here. Look at how this volume has just soared in the stock, similar to the IPO time. So this is very bullish. Unfortunately, it's just gotten way ahead of where I'm comfortable buying, if in terms of my risk tolerances. So I just pull up this chart every now and then and just weep. Okay, Dell is an AI related play that I am in. It's been kind of moribund for a while, but I wanted to point out how constructive Dell is getting. It's been pivoting around its 200-day moving average. Now the 20-day moving average is coming out for support. Again, the more and more I see charts like this, it tells me this market is well supported. I mean, look at how well the 20-day moving average held. It's now converged to the 200-day moving average. I've already bought more shares of Dell. And if it breaks out here, then I start pulling out the call option trades to play what I'm going to assume is going to be a breakout. Look, there's even a Bollinger Band squeeze that's starting to develop around the price action. So hopefully this BB squeeze, as I like to call it for short, resolves to the upside, and that will really set Dell going. All right, here is one. This is one where my risk management told me to get out before earnings. I played this nice breakout. I posted a short about this a while back. Hopefully, some of you were watching that and profited. And good for you if you held on during earnings. I did not, and I missed out a nice 15% gain. I think the stock was up as much as 20% or higher at one point. You can see it stalled out. So it's kind of a warning when it does that right below the all-time highs. But of course, I still love the company, so I'm going to look for another buying opportunity. Okay, specialty steelmaker, ATI. Actually, it used to be called Allegheny Tech. I guess they changed the name to just be ATI. This is a stock I've loved for a long time, but I just got tired of holding through all the churn, and I totally missed this breakout. So I'm just pulling this out to just show how important it is. Let's draw a line there to keep an eye on your favorite stocks. I mean, I've done good with that. I've described some of those for you all before, but sometimes I do miss them, and this is one I missed. Right here. Look at this. This break after it broke out to that all-time high, it just has been on a tear. And for a stock that I know and for a stock that I love, and in a company that I love, I definitely would have bought this if I had been paying attention. Now, of course, it's too hot to handle, and I'll need a pullback to some sort of natural support to get me back in. So that's a trading school lesson. Here's another interesting one. So I saw that eBay had made all-time highs. I was totally surprised by that. I'll just confirm. Sorry, it's approaching all-time highs, which totally surprised me. And this is a very nice chart. I'm not in the stock. Of course, as you would know, I'm not going to chase it higher here along the Bollinger Bands. This is a buy on the dips kind of stock, just plain and simple. So for instance, if it pulls back to the 20-day moving average around 73, I'm probably going to be a buyer and buy even more if it tests the 50-day moving average support, say around 70 or 69. Now, when I saw eBay streaking up, I took a look at Etsy. And check out Etsy has been up even more. So after I saw this, I mean, I really wish I had been paying attention to this 200-day moving average breakout. Etsy was one on my radar actually during the the tariff trauma, drama, and noise, because I put it in my daughter's paper portfolio in a um, stock market contest that her economics class was in. But this is a terrible time. The contest actually was perfectly timed for just bearishness. Anyway, enough of that. We're talking about real money here. After I saw eBay, then I see Etsy. I'm like, okay, I've got to do something. So I went ahead and just did a low risk, low reward calendar call. I think I did a calendar call spread, and we'll see what happens. I'm just trying to, scrape a few nickels off of here and then hope for a pullback that I can really buy into. Sorry, before this video, I forgot to check out the news on Etsy and eBay just to see whether there's some fundamental reasons. But, usually the technicals and the price action is all we need to know. And that's the case here. Now, here's a case where I held on to a stock through earnings and got rewarded. This is Byrna Technologies. They make, I think, personal defense products. And this is one where I did execute the way I'm supposed to, which is I bought the 50-day moving average breakout. I held when it tested 20-day moving average support. I held again when it tested 20-day moving average support again. So again, a well-supported stock. I actually was going to buy again if it tested the 50-day or 200-day moving average, but it never quite got there. And then I just went ahead and held during earnings and I got rewarded a nice 18% gain for the day. I actually sold it a little higher just because it's now testing its all-time high. And, I want to lock in those profits. I think that's the all-time high. Yeah, that's the all-time high. And I just wanted to lock in the profits. This is a stock that, of course, given its bullishness, is a buy on the dips. Novo Nordisk. This is a stock that looks like it's going through a bearish to bullish reversal. I'm a little late in playing this. I bought a little bit today, but I really should have been buying it right here in this area when it broke out above the 50-day moving average. You'll notice, let me pull back here. It had this bearish head and shoulders top. These patterns are just so rare. Usually once a stock tests the neckline, it just does a contrarian move and bounces right away. This is one of those rare times where the head and shoulders top actually was the red flag that it's supposed to be. And the stock broke down below the neckline, tested it as resistance, and has never been the same since. And that was right before a huge 17.8% crash on some trial news. And so now I took a little nibble here and I'm ready to buy some more if it pulls back to 20-day moving average support. But this definitely looks like a bearish to bullish reversal because it has broken above two broken above the 50-day moving average downtrend and looks like it's been well supported for a long enough time at the 20-day moving average. So I'm looking forward to at least test the downtrending 200-day moving average. And last and least is Lululemon, which got crushed post earnings, 20%. This is stock I've written about before as being a contrarian play. I think I was buying it around here and then I sold it. I'm not going to make up stuff. Um, I don't know where exactly I bought or sold, but it was somewhere in this recovery zone. And I'm just glad I took my profits and just didn't push my luck. I thought I did miss out again here when I didn't make a play. I didn't buy the 50-day moving average breakout. I didn't buy the 200-day moving average breakout. It just felt suspicious, and the post earnings plunge has confirmed those suspicions, and it's now below these important trend lines, 50-day moving average and 200-day moving average. So it is a no touch at all for me. Okay, so that is it for today. As always, please subscribe to the channel if you want to get notified of more content like this. Hit the bell icon to get those alerts. You can share this content. Please like it so that the algorithm knows what's up. If you have any questions or comments, always put them down in the comment area. Otherwise, I will see you the next time. You can read more details on my blog at drduru.com/122, all letters. Take it easy and see you the next time.